Hi, my name is Khan and welcome to the new chapter. In this chapter, I'm going to teach you that how we can identify daily bias. Generally, market creating higher high in a bullish market and creating lower lows in a bearish market. Then what happened at a specific point, market looking for the reversal to the upside, and in a bullish market turn into bearish in a downside. So many times you notice when market break the previous day high, then market created sometime very strong bullish candle and sometime create a very strong bearish, and that market create very indecisional or shadow type candlestick formation. But did you ever notice that what happening in a lower time frame? Because when you see the candlestick formation in a higher time frame, but in a lower time frame scenario will be very different. So in this video I'm going to teach you step by step process that how we can identify that market looking for the continuation and market looking for the reversal, what kind of scenario you will see in a higher time frame and lower time frame, and how we can take entries for the buy and sell. This is our daily time frame candlestick formation here. First one is a bullish and second one is a bearish. So what happening here in this case, when market creating strong bullish candlestick formation and these type of thing, you will say this is a continuation pattern. So when market create like this one and candle close here, so as we know this is our baseline. So when price close here, candle A close here and the next candle open V is here. So what happening between this candle here, opening to closing, what happening here, and how we can identify next candle will be bullish like this one. After closing A candle, how we can predict the next B candle will be bullish. Maybe this candle can be bearish and maybe sideways and maybe continuation. So how we can identify after candle A closing that next candle will be bullish like this one, candle B is a bullish, maybe this candle will be sideways and maybe looking for the reversal. So we can identify using lower time frame structure. So this is our daily time frame structure and you can use lower time frame in a 15-minute time frame. So what happening here in this case, we can say market momentum is a bullish. Generally what happening here in this case, one market going higher high and then what happened, price close here. So once price close here, it means the structure was bullish and now market close here and candle A close here. And now we are expecting that if market trying to go higher and trade above this baseline, so we are anticipating that price can go higher. But if market not able to break this one, mean the break the previous baseline, means if market trading below this baseline, it means overall structure is a bearish and we are anticipating that market looking for the downside, and we can plan for the sell at this point after taking out the inducement right here. So this is our area when we are anticipating that market looking for the downside. But what happened here, if market not able to push downside and just trying to go higher and continue pushing upside, so what happening here in this case, similar thing applicable here. If market trying to go higher, taking out the inducement and price mitigate here, and we can anticipating that market looking for the continuation to the upside. This is our zone when we can take entry here. So this is our 15-minute structure. Here we can follow the lower time frame confirmation to add multiple position, and also we can enhance our risk reward. That's why we can switch here in a lower time frame. So this is our 15-minute time frame PY, because this PY taken out the previous low as a liquidity. Once market taken out the liquidity, this is our zone. When price tap on it and we can switch here in a lower time frame, then we can plan here for the buy after lower time frame confirmation. So this is our process that how we can easily identify our counter move. We can easily identify continuation trend, and if price trading below the baseline, so we can plan for the sell in a downside, but we need to wait for it lower time frame confirmation as well as. And same thing applicable after this one. For example, if candle C open here, so the process will be similar as we did here A and B. So the next process will be applicable here B and C. If market trade above the baseline, so we can plan for the buy. If market trade below the baseline, so we are looking for the sell. Following the structure, market taking out the inducement, and we can plan for the sell and buy. And same thing applicable here in a bearish market. In this case, we can see this is our baseline. Candle A close here. After candle A close here, next candle open B is here. So we know that if market looking for the continuation, that market must be trade below the baseline. So we are expecting some sell setup. But if market trade above the baseline, so we are looking for the buy in a bearish market as well as here. Look at this one. For example here, if market momentum is a bearish and continue pushing downside right here. So what happening here? Market taking out the inducement, taking out this one. So we are planning here for sell after taking out this one. This is our inducement right here, and this is our order flow. After mitigation this order flow, we are looking for the sell right here. So this is a process applicable in a continuation pattern, and we can plan here for the sell right here. So once market taken out the inducement, mitigate this order flow, we are looking for the continuation in a downside. This is order flow and price trading below the baseline, so we can plan for the sell. And if market not able to create this structure here, sometime what happen, price just pushing downside like this one, candle A trading like this one. And what happened? Market trying to go higher, again higher, again higher. So we are expecting some reversal to the upside and we can plan for the buy at this point right here. This low act like an inducement. Once market taken out the inducement, we are anticipating that price continue looking for the reversal to the upside in a bearish market. And once price tap here, we can switch back here in a lower time frame and we can plan for the buy to the upside. But you need to understand one more thing is here, that if market the previous day is a bullish, strong bullish, which means the indication is here that previous day is a strong bias. So the next day is a probability is higher that market can continue follow the previous day. And same thing applicable in a bearish market. For example, candle B close here in a strong bearish candle formation. So the next candle C will be, again we expect our market will be downside. It doesn't mean that there is no fixed guarantee that a next candle will be bullish and bearish, but the probability is higher that a previous day market close in a bullish, so the next day market will open in a bullish, because market sentiment is a bullish, and if structure also follow the continuation pattern, so probability is higher that market continue follow the previous day, because trading is all about probability. You can win and lose and everything, so simply you need to play as per the structure. Now I'm going to show you exactly on chart that how we can identify daily time frame candlestick to 15-minute time frame, and once market create 15-minute time frame POI, then how we can switch back in a lower time frame. What is the complete process? I'm going to teach you step by step. Let's see. This is our Euro USD chart in a daily time frame structure, and we can see that market trying to go higher and continue pushing upside. Before this one, we can say how many times market create strong bullish candlestick formation. If we start from bottom of the structure, we can see here how many times market create strong bullish candlestick formation here and continue pushing upside. Later what happened? Market start selling and selling and selling. So these are strong impulsive wave, and similar thing is happening here. In this case, there is no corrective phase happen here, just creating upside and downside. Both looks like a impulsive move. Later what happened? Same thing applicable here. Previous high sweep, previous low sweep, again buy and buy, again buy and sell. But these type of situation like this one, buy and sell and buy and sell, looks like very complicated, but in this chapter I'm going to teach you step by step process that how we can easily trade even the market structure is in a continuation and a reversal pattern, and sometime price create like this structure look like this one. This is a very looks like a complicated price not decide which side market is going on, and same thing applicable here and same thing applicable here, and this one is also looks like a very complicated zone. It means market not decide which side market going on, maybe bullish and bearish. So how we can take trade them? I'm very sure that you can easily trade in this leg, in this leg, and in this leg as well as here, because these looks like very clear and clean entry here. When you switch in a lower time frame, I will teach you. This one also looks like a very clear and clean entry here for the sell setup right here. These are very simple and clean entry when you switch back in a lower time frame. But I will teach you both step that how we can trade in a continuation move and counter move. First, let me show you here in a counter move how we can trade in a counter move, because in a counter move it looks like very complicated to understand, because it take a lot of time to understanding thing. When you trade in an impulsive move, so you will get a very clear entry for the buy and sell. Let's trade here in a counter move right here. We can say that market momentum is a bullish and continue going high. As per the current price, what are you looking here and what we can expect here? Look at this one. When market create strong bullish candlestick formation here, that means market momentum is extremely bullish here. Again, what happening here? This candle formed here as a indecisional candlestick. This is a doji candlestick formation here. Later what happened? Again market trying to go higher. But if you notice here, previous master candle high was here, which was sweep here, which is an indication that market can reverse at this point. This is an indication here. It doesn't mean that next day market will be dropped like this one. No, this is just indication, and once market give indication, it take a lot of time, multiple confirmation before the buy and sell. Again, what happened here? Next day market was bullish here. If market trade above it, so we can plan for the buy. If market trade below it, so we can plan for the sell. So this is a very simple thing here. And if you are trading in a daily time frame, and if you are finding daily time frame candlestick formation, simply you can switch back here in a 15-minute time frame. Now let's see what happening here in a 15-minute time frame. So in this case, we can see here market open here at this point right here. The previous high was sweep here. After this one, what are you expecting here? We know that if market trade above the baseline, simply we are looking for the buy. Even structure is also looking bullish. So the high probability is here that if market create here any kind of like bullish pattern, so we can plan for the buy to the upside. We have only one confirmation is here that previous day high is a sweep here, which means the market looking for the sell. So it means you need to prepare for both side. Means that if market create here any kind of like bearish pattern, so we can plan for the sell. Otherwise, if market not create here any kind of like bearish pattern and create here bullish pattern, so we can plan for the buy to the upside. And let's see what happens next after this one and how price reacting in this case. In this case, we can see here price trying to go higher. This is the first high is a broken. The first high is a broken. Another second high is a broken. And again, what are you expecting here? We are expecting that if market momentum is a bullish, simply when market taken out the inducement, that then we can plan for the buy to the upside. After taking out the inducement, what are you expecting here? We are expecting that if market close overweight, so we can plan for the buy to the upside. But market not able to close overweight, that means you need to wait for it clear direction before the buy to the upside. And if market create here any bearish pattern, so we can plan for the sell. Let's see what happens next after this one and how price reacting in this case. We can see here again market break the previous high is here, again break previous low is here. Once market break this previous low is here, which is an indication that market again grab the liquidity is here. Once market grab the liquidity, it means we are looking for the buy after creating this one. In this case, we can see here the previous structure was here, which one is a close here. Taking out the liquidity, price close of it and price trading above the baseline. Where is the order flow? Order flow is here. This is our order flow right here. Once price tap on it and we can plan for the buy to the upside. When we switch back here in a lower time frame, then we can get entry. If market create here any kind of like bullish pattern, so we can plan for the buy, otherwise no. Because market taken out the previous low as a liquidity sweep, break the previous high, so we can mark them as a POI. As I told you in a previous chapter that if market momentum is a bullish in a structure formation and sweep the previous low as an inducement, so we can mark them as a POI for the buyer side like this one. Okay, so same thing happening here. Previous lows are sweep here, break the previous high because before this one market is a bullish and continue breaking higher high and higher high. And same thing applicable for the bearish market. Like for example, if the previous high is a sweep here as we did here, after this one market push downside and price close below it, so we can also plan for the sell, but price not close below it. So now let's switch back here in a lower time frame to see exactly what happening here and how we can enter here in a lower time frame. Let's see. So in this case, we can see this is our lower time frame structure in a 2 minute and price tap on higher time frame PY. Once price tap on it and we are looking for the buy to the upside, you need to follow the bullish structure formation. In this case, we can see here technically you need to identify the structure first. This one is our previous low which was broken here. This is our impulsive move right here. The previous high is a broken here. It means this is a previous swing high, previous swing low, again going higher high. This is one more high is here, but this one is a not a valid pullback here. So we are not considering this one as a previous structure here. So technically the previous low is a sweep here, break this one and price push upside and mitigate the unmitigated order flow, which one is here. It means if price tap on it, we can plan for the buy at this point right here. There is no lower time frame refinement here, so we can suddenly buy here, put the stop loss just below it. Why we are taking entry here and how we can refinement here in a lower time frame as well as here. As per the 15-minute time frame and 2-minute time frame, PY looks similar here, but we can little bit refinement here. You need to refine the order flow first. This is the order flow, which one is here. This one is mitigated by the pullback, and next one mitigated by this pullback here, and this one looks unmitigated order flow right here. So this is our area when we can take entry here, put the stop loss just below it. And why we are not putting the stop loss just below it? Because if you are putting the stop just below it, this low act like a inducement right here. Okay, that's why this is not a safer area for the buy. So we can put the stop loss just below it because this area grab the liquidity right here. Once market grab the liquidity, so we can put the stop loss as per the structure. So let's see what happens next after this one and how price reacting here. Okay, and where is the target? Target we can set the previous day high. This is our target right here, and we can set as per the previous day. And also we can set based on Fibonacci tool. We can use the Fibonacci tool top to bottom right here. So 1.618 you will get target. You will get almost 2.5 RR. Okay, so now I'm going to show you exactly what happening here and how we can get entry here, if possible another entry. So let's see what happens next after this one and how price reacting here. Okay, so price tap here. And later what happened here, market trying to go higher. Okay, so if you notice here, market taken out this inducement right here. So once market taken out this inducement, as I told you that market taken out this inducement and now trying to go higher. So if market trying to go higher, market break the structure, so we can plan for the buy to the upside right here. Same thing happening here, market break the structure. After break the structure, market should be taken out the inducement, then we can plan for the next buy setup right here. We can see here, break the structure, taken out the low. If market close of it, so we can plan for the buy to the upside right here. If no, then you have to wait for it. Okay, price not taking out the investment and market create one more structure, continue falling and falling. So this area is not good here for the buy. And let's see what happens next after this one and how price reacting after this one. Okay, price trying to go higher and higher. Okay, and what happening here in this case, market reached our take profit, which one is here, and finally market hit our take profit right here, and you can get 2.5 RR. Okay, now again switch back here in a 50-minute time frame. In this case, we can see here clearly that how price enter here and how we can take entry here using lower time frame structure. And why it look like complex, because we are trading in a counter move in a higher time. That's why market take a lot of time to build the structure in a lower time frame as well as before to push higher and lower. So this is our entry, and this is our stop loss, and this is our target, and everything is logically here. Just you need to wait for it to create the structure in a higher time frame, wait for higher time frame PY mitigation, then you can enter as per the lower time frame confirmation. So this is exact process that how we can take entry in a bullish market when market taken out the liquidity and tap on higher time frame PY. Later what happened after this one and how price reacting this one. Okay, market trying to go higher and more higher. We can see here market respect this order flow is here. So once price respect this order flow and again going higher high, but I'm not saying you that you need to buy here because market not taken out the investment, so we are not interested here for the buy. And let's see what happens after this one and how price is reacting this one. We can see here clearly that market pushing downside and upside, and later what happened here, market just taken out the investment, then we can plan for the buy and sell. In this case, we can see here market sweep the investment. It means the investment is a sweep, market push downside. Once market sweep the this low, and we can mark them as a PY. This is our PY here. It means if price close below it, we can switch back here in a lower time frame, and if market create here any kind of like sell opportunity, so we can enter here for the sell. Everything is fine. Of course, no. Why we are not entering here for sell? Because we are not trading below the baseline. That's why. Okay, so you need to understand here we are already trading above the baseline. That's why we are not interested here for the sell. If same setup create below the baseline, so we can enter here for the sell. Okay, and let's see what happen next after this one and how price reacting here. Okay, market next day open here. Okay, next day market open at this point right here, and this is our baseline. And let's see how price react here in this case, and market trying to go higher and lower. In this case, we can see here clearly that market trading below the baseline, and before this one we can see structure going higher high and lower low is here. This was the first pullback here. Again what happening here, again break the high and sweep this one close below it. Once market close below it, it means the structure showing bearish momentum, and this is our order flow and trading below the baseline, so we can plan here for the sell in a downside. So once market close below it, and we can expect some sell setup downside right here. Why we are planning here for sell? Two confirmation is here. First one is here price trading below the baseline, and second confirmation is here that market close below it. It means the opening of this one and candle close below it. It means this is a liquidity grab here. Let me show you here in a daily time frame first. In this case, we can see here market sweep the previous high is here, which is indication that market grab the liquidity. Once market grab the liquidity, so this is a clear indication we are expecting some sell setup in a downside. So next day market open here, and we are also looking here for the sell in a downside. So this is our first confirmation, and second confirmation is here in a 50-minute time frame, price trading below the baseline. So if price trading below the baseline, this is our PY. We can switch back here in a 2-minute time frame to see exactly how price reacting here. In this case, we can see here what happening here. Price trading below it and close here, and you need to wait for it to take out the investment, and we are looking for the sell right here. So market just continue falling and falling right here like this one, and market not taking out any kind of like investment. So this is one more pullback here. This time market taking out the pullback. If market pushing downside and create here, so we are interested for the sell, but price should be close below it right here. So once price close below it, and we are looking for the sell right here, this is our PY, mean the order flow in a lower time frame, and we can immediately sell at this point right here. Why? Because the previous highs are taken out, which act like a liquidity. We can sell here, put the stop loss for the safer side just above the high. And where is the target? Target we can set based on Fibonacci tool, and also we can set the previous swing high or low. Previous swing low is a very closer of this one, so we are not setting this one as a target. We can extend target using Fibonacci tool. So we can switch back here in a 50-minute time frame to set our take profit right here. So this is our previous low, which one is here, and the previous low and previous swing high, which one is here. So 1.618 usually here, so we can set the target right here, and you will get almost 5.8 R, which means you will get almost 6 RR. Okay, so let's see what happened next after this one, and we can switch back here again in a 2 minute time frame. Let's see how price reacting after this one. And as you know, this one is here, market taking out the inducement. That's why we are planning here for the sell. I hope everything is clear till now. Market pushing downside, taking out the high, push downside, close blade, and we are looking for sell. This is immediate order flow. We can immediately sell at this point. Put the stop loss just off the high. Okay, so let's see what happened next after this one and how price reacting later after this one. Price continue falling and falling downside. Okay, and if there is any opportunity, so we can enter. No, of course no, because we don't have any higher time frame PY in a higher time frame, so we are not interested here for the sell after this one, because when market create opportunity in a higher time frame PY mitigation, then we can switch back in a lower time frame, then we can enter here. So this is our entry and this is our stop loss and this is our take profit right here, and we can see here we can hit our 5.8 RR and market almost drop right here, which is almost 8.5 RR. Okay, so this type of risk reward you can get easily identifying the higher time frame PY first, and later we can switch back in a lower time frame refinement. Then you can get very aggressive entry for the buy and sell. Now I'm going to switch back here again in a 50-minute time frame to see exactly what happening after this one, and price start rising to the upside, and let's see what happen next after this one and how price react here. In this case, we can see here clearly that market trying to go again higher. This is our last pullback is here, and after that what happening here, market break the high, and this time market taken out of the liquidity. So once market taken out of the liquidity, then we need to wait for it to candle closing right here. So it means if price close here, take a pullback, so we can mark them as a high time frame PY, and if market create here any kind of like lower time frame entry, so we can plan here for the buy to the upside. But problem is here that price not trading above the baseline. That's why this looks like a risky here for the buy. We can see how price rapidly push higher. If we enter here, we can get very good entry here for the buy. But rule is here that if price trading above the baseline, so we can get high probability entry for the buy, and this type of entry look like a 50% of the probability for the buy and sell. What happening after this one and how price reacting after this one? Price trying to go higher and higher, and let's wait for it few more setup for the buy and sell. In this case, we can see here market open here and close here. It means the swing pressure here to the upside. This is our opening of the candle, and this is our closing right here. It means the selling pressure and buying pressure both are equal in a bearish market even. So what happening next day? Next day is here market open right here, because this one is here opening candle, and this is our baseline. And after this, what are you looking here? If price trade above the baseline, so we are looking for the buy. If price trading below the baseline, so what we are expecting? We are expecting some sell setup. In this case, what happening? Market break the previous sweep high, previous low, again high is a break here. But what are you looking here? We are looking for the sell after sweep the previous high. So once market sweep the previous high as we did here, so we can plan for the sell at this point right here. So this is our entry. Okay, and we can enter here after closing this one, and we can switch back here in a 2 minute time frame, then we can enter. And same thing applicable here. If market continue going upside like this one, break the previous high and sweep this one and candle close blade, we can enter here for the sell in a downside after using lower time frame confirmation. Switch back here in a 2 minute time frame to see exactly what happening here and why we are expecting, because price trading below the baseline. In this case, we can see here market taking out the inducement, push downside, trading below the baseline. What happening here? This is our last buying momentum before the sell right here. Okay, so we can plan for the sell at this point right here. This is our entry, and put the stop loss just off the high, and safer side this is above the high right here, and target we can set based on Fibonacci tool. But later what happened, market gave small reaction and filled this setup here, and this is our stop loss right here. Okay, because price taken out the previous high, liquidity push downside, close low it, and we can plan here for the sell. Okay, and same thing applicable here. And the next time market sweep the previous high, after sweep the previous high, what happening here? Price traded below the baseline. Later what are you looking here? We are also looking for the sell after taking out the inducement, market pushing downside right here, break the low. Again what happening here? Break the low, again break the low right here, and this high is a taken out, which act like a liquidity, mean the liquidity is a taken out. Again market break this low right here. It means this entire zone act like a PY as we did in a recently previous candle. Previous day is here. In this case, look at this one. The previous high is a sweep here, means the inducement sweep here, break this one, and this entire zone act like a PY, so we can plan for the sell right here. So this is our entry, and put the stop loss just off the high, and where is target? Target, we can set the previous day low, which one is here. So this is our entry and this is our target, and you will get almost 4 RR. Okay, and let's see what happened next after this one and how price reacting after this one. Price pushing aggressively in a downside move. Okay, and this time what happened here? We can see market reached almost 2 RR, right? More than 2 RR. And later what happened? Market hit our stop loss. This case you will get almost break even, because once market broke it and again market break the low, we can shift our stop loss on break even. So this entry will be our break even entry here. Now again switch back here in a 50-minute time frame to see exactly what happening here. In this case, we can see here price trading above the baseline right here, but market again break the previous day high as well as here. It means liquidity is taken out, which is an indication that next day market is going to be pushed downside right here. So if market create here any kind of like bearish pattern, so we are interested for the sell. Again look at this one. In this case, we can see here market again taken out the inducement. After taking out the inducement, price close blade, and we can plan for the sell right here. So if market create here any kind of like entry, so we can plan for the sell right here. Okay, but let's see what happen next after this one and how price react here. And market open next day. Okay, market open next day, and what we are expecting here? We are expecting that if market trade below the baseline, so we can plan for the sell, and if market trading above the baseline, so we can plan for the buy to the upside. In this case, we can see this is a previous high and this is a previous high. Which one is a sweep here, and where is the previous low? This one. So once market close below it means the indication here that market looking for the downside move right here. If market create here any kind of like lower time frame entry, so we can plan for the sell in a downside. And let's see what happens next after this one and how price reacting. In this case, we can see here clearly that how price trying to go higher and lower in a lower time frame as well as here. In this case, market close below it in a 50-minute time frame. I'm going to show you exactly one more time is here, that when market close below it and we need to wait for it in a lower time frame confirmation, then we can plan for the sell in a downside right here. So once price close below it, we can see here you need to switch back here in a lower time frame, then we can plan for the sell. So this is our 15-minute structure, and we can see here one more time is here. This is a very interesting thing is here. If you notice that if market momentum is a bearish, and we can see here the previous high is a taken out, which act like an inducement. Once market taken out the inducement, either market push downside and break them like this one. For example, if market momentum is a bearish, taken out this one and close blade, and we can plan for the sell. But in a first attempt, if market not taken out this one, then market should be mitigate the unmitigated order flow, then we can plan for the sell. You need to identify in a left side there is any unmitigated order flow available or not. All order flow is mitigated here. This one is mitigated here, and this one looks unmitigated here. It means once price tap on it, and we can plan for the sell right here. Put the stop loss just off the high, and this is our entry, and target we can set based on the previous high or low, and also we can set based on Fibonacci tool as well as here. The previous day low is here. We can set the target right here. So in this trade, you will get almost 5 RR. Okay, so this is our first area when we can take entry here. Inducement taken out, and again what are you expecting here? We are expecting that if market again go higher and taken out the inducement, so we are looking for the sell again in a downside right here. What happened here? Market push downside and market hit our take profit right here. So this is our entry, and this is our stop loss, and this is our take profit right here. And what happened here? If market trying to push downside right here, this is our previous high and previous lows are broken, again low is a broken, and this high is a sweep here, so we can again plan for the sell right here in this case. Okay, so we can add one more position here for the sell, but unfortunately market not taken out the previous high, so we are not adding here any kind of like sell opportunity. So this will be additional entry here for the sell in a downside. So if you are thinking that why it take a lot of time to create the structure and looks like a very complexity, because we are trading in a counter move in a higher time frame. That's why market in a lower time frame moves something like this one. But when you trade in a impulsive move, then you will see very smooth price action in a lower time frame. Now I'm going to show you a few example that how market look like in a impulsive move in a upside and downside. This is our daily time frame structure, and we can see a price pushing downside in an impulsive move. When market create impulsive move, then you will get very clear and sharp entry for the buy and sell. Right now we can see here the last two candle showing bearish momentum is here. It means momentum is a bearish and market looking for the continuation in a downside right here. So this is our previous candle, which one is here. It means the next candle open here, and if market create here any kind of like bearish pattern, so we can plan for the sell. Now I'm going to switch back here in a 15-minute time frame to see exactly how price reacting here. This is our baseline, because price close here and next day market open here. So let's see how price reacting in this case. And if price trade above the baseline, so we are looking for the buy to the upside. If market trade below the baseline, so we are looking for the sell in a downside. So let's see what happens next after this one. And we can see price trying to go higher and higher, and later what happened, market close below it, again break the low. It means momentum is a change, bullish to bearish here. So wait for it. What happened here? Market taking out the inducement. And once market taken out the inducement, what are you anticipating here? We are anticipating that if price push downside and close below it the baseline, so price did same thing here. Once price close below it, and we can plan switch back here in a lower time frame. So in this case, we can say that market momentum is a bearish and continue pushing downside and trade below the baseline right here. So if market trade below the baseline, simply you need to follow the recent structure, and we can plan as per the buy and sell based on the recent structure. This is a confirmation, and we can immediately sell here based on the 15-minute time frame as well as, and also when we switch in a lower time frame, we can plan for the sell as per the previous structure right here. So the last structure which was here creating higher highs, and later what happened turned into bullish, and later what happening, this is a previous swing high and this is a previous swing low. So if anything happened between this one, this is called internal, and between the internal structure we can see here the market is going higher high, again push downside, later what happened, market again push downside, and then finally market push downside and close below the baseline. So important thing is here that you need to identify unmitigated order flow, because this one is a grab the liquidity, mean the previous high is a taken out, push downside, so we can plan for the sell. So in this case, if you notice, this is our entire zone, the last buying momentum before the sell. So if price tap on it, we can plan for the sell right here. The next thing is here that you can use this entire zone as an order flow, because this is entire zone and this one is also refinement zone. So technically we have a 3 POIs here. So which one we should use here? The probability of the mitigation, first one is a here, the first one is a higher, and second one is a medium, and third one is a lower, and you will get reward as per the higher time frame to lower time frame refinement of the order flow. So in this case, for example, if you enter here based on the higher time frame, this one is order flow, and put the stop loss just off the high, and same thing applicable here. In this case, this is a medium order flow, stop loss should be same here, and the third one is here right here. So the third entry right here. So if you enter here, so where is the target? Target will be same, stop loss will be same, but the risk reward will be different. So where is the target? Target we can set based on the Fibonacci. In this case, we can see here the previous swing low and previous swing high, which one is here, and we can set the previous 1.618 is our target, and here you will get almost different risk reward right here. And also one more thing I want to mention here, that if you like to sell directly here without any lower time frame confirmation, just taking out the inducement, market close below it, and we can directly sell at this point right here. So in this case, your target and stop loss will be different like this one, and here you will get almost 2.8 R, almost 3 RR. Okay, so let's see what happens next after this one and how price reacting here. In this case, market trying to push again downside, and what happened, market push aggressively in a downside and hit our take profit as per the 50-minute time frame. But when we switch in a 2-minute time frame, we can see here how many entries are executed here. We can see here the first one is a larger, which one is a mitigate here, and the second one is here medium, this one is also mitigate here. So the extreme entry is a miss here. So basically 2 entry mitigate here. The first larger order flow and medium order flow is a mitigate here, and then market push downside and hit our take profit, and we can easily get 4.5 RR, and next one 3.8 RR, and based on 15-minute time frame you will get almost 3 RR. So this is a difference between the higher time frame to lower time frame refinement. And when market momentum is extremely bullish or extremely bearish in a higher time frame, in a daily time frame candlestick, so you will get very aggressive entry in a 50-minute time frame for the buy and sell. But recently I teach you in a counter move, but when you trade in a impulsive move, you will get like this setup as I did here. So you need to backtest on your chart, then you can understand more better. And maybe it look like a complicated for you in a starting, but when you understand this one, seriously, this is a very easy to trade. So thank you so much watching the entire chapter. I hope you learn a lot of things, and if you did not understand anything, simply you can rewatch this chapter multiple times. So in this chapter enough for the day, and I will see you in the next chapter. Happy trading.